Welcome to the Bull versus the Bear, where we break down the two sides of the investment story for today's most talked about stocks. Today, we're diving into the high-flying ambitions of ACHR Aviation. Is this the future of travel, or just a dream? Let's get into it.
So let's just start with a number that kind of sets the stage for everything we're about to talk about. $1 trillion. That is Morgan Stanley's projection for what the urban air mobility market could be worth by 2040. It's a colossal figure, right? And it explains exactly why so much money and attention is flooding into this space.
You know, for decades, the whole idea of hopping into an electric air taxi to just skip over city traffic, it's felt like pure science fiction. But that promise is right on the verge of becoming our reality, and ACHR Aviation is one of the key frontrunners trying to build that future, like right now.
Okay, so that brings us to the real question for investors, doesn't it? Is ACHR Aviation a ticket to that trillion-dollar future, or is it just a super high-risk gamble that's set to burn out? There are two really compelling and, well, very different sides to this story. Let's dive in.
First up, let's explore the bull case. This is the argument that ACHR's stock isn't just cleared for takeoff, but it's heading for the stratosphere. The bull argument really kicks off with this massive figure, over $6 billion. Now that's the current value of ACHR's indicative order book for its Midnight aircraft. It's a powerful signal of some serious commercial demand just waiting to be fulfilled.
And look, this isn't just some speculative demand from random companies. Look at this roster of partners. We're talking about an aviation giant like United Airlines, a manufacturing powerhouse in Stellantis, and even the U.S. Department of Defense. These are not just logos on a slide, okay? They represent deep pockets, serious manufacturing know-how, and a guaranteed customer base. That de-risks ACHR's path to market in a huge way.
And the tech progress? It's not just on paper. As the CEO points out here, they've made some remarkable strides. Their flagship aircraft, Midnight, has already nailed its critical transition flight. Now what that means is it goes from a vertical, helicopter-like takeoff to flying forward like a plane. That is a massive engineering hurdle that, believe me, a lot of competitors are still trying to clear.
Now, this partnership with the automotive giant Stellantis, this could be ACHR's secret weapon. As you can see, Stellantis isn't just writing a check. They are bringing decades of high-volume manufacturing expertise to the table. And the goal? To crack the code on producing 650 of these aircraft every single year, a challenge that has grouted many aerospace startups before.
And to fund all this, ACHR has built itself a pretty formidable war chest. After a recent equity raise, its total liquidity has been boosted to over $2 billion. What this does is it gives the company a multi-year cash runway to get things done without being immediately dependent on the capital markets. That's a huge advantage.
But for every powerful bull argument, there is always a bear waiting with some serious headwinds. So now, let's look at the case for some significant turbulence ahead.
Right, that impressive $2 billion cash position, well, it comes at a cost. While it does provide a runway, ACHR is still a pre-revenue company. That funding came from issuing new shares, which dilutes the value for existing shareholders. It basically signals a pattern that could easily continue as long as the company isn't generating its own cash.
And the financials, they paint a pretty stark picture. This snapshot shows a massive cash burn. $175 million in operating expenses, leading to a $130 million net loss in a single quarter. But the most critical number on this slide, it's that big round zero for commercial revenue. Right now, it is all outflow with absolutely no inflow.
So here's a crucial point. Timelines in this brand new industry are incredibly fluid, and they almost always seem to shift to the right. ACHR's commercial passenger flight target, a huge catalyst for the stock, has already been officially pushed back from its initial 2025 goal to 2026. Delays are real riskier.
And this slide really highlights a major competitive risk. ACHR is not alone in this race, not by a long shot. And as you can see, they're currently behind their main rival, Joby Aviation, in the all-important FAA certification process. Joby is already in the final testing phase, which could give them a significant one-year head start. That's a big deal.
Hey, remember that massive $6 billion order book from the bull case? Well, this slide gets to the fine print. The keyword here is indicative. These are not firm, legally binding purchase orders. They are conditional agreements. What that means is, if certification delays keep happening, those billions of dollars in potential revenue could just vanish.
Okay, so you've heard the optimistic bull and the cautious bear. Let's move to the verdict and see how this all really boils down to the core challenge ACHR is facing right now. When you strip everything else away, investing in Archer today is a pretty binary bet. The technology is largely proven, we know the plane can fly. The entire story now hinges on one single word: flawless execution on the business side of the equation.
So to succeed, Archer has to navigate this execution gauntlet, a series of 4 immense hurdles standing between it and actually making money. They have to get FAA certification, scale manufacturing with Stellantis, convert those indicative orders into real cash, and finally reach free cash flow break-even, which they're targeting by 2028. That's a tall order.
And you know what? Nothing captures this uncertainty better than Wall Street's own predictions. Just look at the spread in these analyst price targets, from a low of $4.50 all the way up to a high of $18. This massive range shows that even the experts are completely divided. It perfectly illustrates the high-risk, high-reward nature of this stock.
And that brings us to the final, crucial question. And this one isn't for me to answer, it's for you.
So, what do you think? After hearing both sides, has the bull case convinced you? Is Archer cleared for takeoff with its partnerships and that huge order book? Or does the bear case, with the cash burn, the delays, the competition, suggest it's facing a very long delay on the tarmac?
We really want to hear from you on this one. Drop a comment below and let us know which scenario you think is most likely, and, most importantly, tell us why.
And if you found this breakdown valuable, make sure you subscribe to The Bull versus the Bear for more deep dives into the companies shaping our future. Whether Archer soars or stays grounded, the race to own the skies is one you are not going to want to miss. Thanks for watching.